before I talk about the next topic, I want to just go ahead and mention about China. I talked about the mild deflationary issue there. They cut interest rates by 40 basis points. First cut in around 2 years, down to 5.6%, which is not that far off of the record low rates in China, which is 5.31%. I'm willing to bet that they're going to make new lows in interest rates in China over the next 2 years, maybe 3 years, as problems continue to mount in China. Now, next issue I want to talk about before I get into the U.S. economy. Of course, I've talked a little bit about Japan, a little bit about Brazil, a little bit about Europe. U.S. economy, of course, December 5th, non-farm payrolls surged by 321,000 in the month of November. And that's the most since January 2002, right? That's almost 2 years. Unemployment rate was steady at 5.8%. And furthermore, the employment data for September and October were revised upward to show 44,000 more jobs than previously reported. So we look now at the employment situation, and we see that November was the 10th straight month of 200,000 plus jobs created. That's good. That's good. Now, I'm not going to go over the bad aspects of the job market. I've talked about it many times. There's no need to beat a dead dog, right? But nonetheless, things could be worse, right? There is some relative improvement. It's much better, obviously, than Europe and many other nations. So over the past 3 months now, with the latest revisions, September, October, November, the average job creation is 275,000 jobs per month. That's good. That's what we need every month. It's not going to happen. I don't care what the data comes in. The fact is, folks, is this whole globalization system, free trade, all this trash, this is what is causing the problems. This is why we have structural problems throughout the world. There's probably only a handful of economists that understand this, but they're not going to speak out. Okay? They're not going to speak out about it. And the fact is that, by the way, this is a very important point I wanted to make. If you look around, and I've talked about, the structural problems, which basically means the depression, right? But I've talked about all these issues over and over again. And the reality is that these problems are largely the cumulative effect of free trade. This is what's going on. So you're seeing this push. Remember the push for austerity by the IMF? And of course, that was not only geared towards ridiculous things like a slash in minimum wage and other things that actually strengthen the whole free trade scam, such as labor busting, right? Destroying collective bargaining arrangements and so forth, especially in Europe. Of course, they don't really exist that much in America anymore. And they're also trying to bust them down in Canada as well. So this whole agenda was also strengthening free trade, which is the enemy of the working person. But also this problem that we faced, this restructuring problem, the need for restructuring, is due to free trade. And this is what you're not going to be told. They won't tell you this. I think there's a small number of people in the world that understand this. Once again, they're not going to speak about it. And the reason why free trade's caused this is because several decades ago, before we had this whole unfair trade situation called free trade, we had an economic system in the West that was supportive of our national economy. That was supportive of wages. There was a loyalty factor, and you had good benefits, good health care benefits, good retirement benefits, disability, you name it. Problem is that over the years, what's happened is that the economic foundations that were once created, that once drove America and some of the other nations, but specifically America, but also Europe, you no longer have the ingredients in place. In other words, because of free trade, you don't have the financial backing to support these pension plans and these healthcare systems from the corporations and even the government, the public workforce, because of free trade. That's right, folks. That's what free trade has done. You don't hear anyone talking about that. We know, we see the effects of free trade on our jobs, right? That's obvious. But the reality is, and of course there's other things involved as well. Healthcare inflation is a beast of its own. But the reality is this. The bottom line is that probably the most hidden adverse impact of free trade on large populations is that it has whittled down the entitlement system, the social safety support system of America, and it's really starting to whittle down in Europe as well now. And this is the reality. This is not what people are being told. They're not being told the truth. And the reason why is because people would revolt, okay? This is what's going on. It's all in the name of corporate profits. So I wanted to make that point clear. It's another reason why, of course, I've been banned. The establishment out there doesn't want you to hear this. You see, so what they're going to do is they're going to position charlatans and false heroes out there as your hero, right? The Ron Pauls of the world, the Michael Moores of the world, right? You see, that's the deal, because they're not going to tell you the truth. They're going to go on some other angle and tell you some bullshit to make you think they're telling you the truth. You see? Anyway. So let me just go on now. U.S. economy is, once again, it's in an upward trend. Nothing great, but relative to the rest of the world, it's doing pretty damn well. I expect the momentum to carry over into 2015. In contrast, I think that, the UK, although it's been strong, actually the UK economic growth is stronger than the US in 2014. I think probably going to see a flip-flop there. I think UK economic growth is going to wane. And I think it's still going to be fairly strong, but I think it's going to be less strong than the U.S. I've talked about that. U.S. dollar. What about the U.S. dollar? As I mentioned last time, I think the U.S. dollar will remain strong at least through the first part of 2015. Due to the deflationary pressures throughout the globe, as well as the general weakening of many other currencies. So, and by the way, keep in mind that at any point in time, when the U.S. government feels that oil prices are too low, it's causing a problem, or the dollar is too high, they can change that. They can weaken the dollar. Keep in mind, the dollar is strong, the trend is up, and it's going to remain up for, I can't say it for sure, but I think it's going to remain up for quite some time. Maybe, 2, 3, 4 months, who knows? That's what I would suspect. But it can only go up so much. There's only so much upside. It's a currency. It's not a stock, okay? There's no capital appreciation. The sky is not the limit to currencies. They go up, they go down. And as the U.S. dollar continues to go up, as I talked about a few months ago, it's impacting adversely U.S. manufacturing, right? U.S. export trade, which has been one of the small bright sides of the U.S. workforce, the U.S. economy. Manufacturing is clearly not where it was pre-crisis, but the manufacturing employment has managed to make some progress, right? So this is one thing I think that Washington's probably watching. I think that once there's a big problem with the manufacturing export, they're probably going to weaken the dollar, okay? So that's why you got to be careful with oil, because of course that the oil dollar link, which I've written about so much, as the dollar goes higher, that gives more room for oil to go down, right? And vice versa. So I just wanted to mention that. And of course, I talked last time about the Aussie dollar. As a matter of fact, in the November 2nd audio, I believe that was the audios that I released around the part 1, the commodities section. I released 3 audios, right? And I talked in, I think I wrote it down. In audio 3, I mentioned that the yen would go lower, and it's gone lower. I mentioned also in audio 3, Aussie dollar would go lower. I said, look for weakening, and then you can short it, right? Matter of fact, I mentioned the Aussie dollar, I believe, had another 10 to 15%, I think it was around 15% downside over the next 1 to 2 years. And it can go lower with the blowout in China. I'm just talking about a normal trending situation. The Aussie dollar is going to go lower. If China blows out, it could go much lower. In audio 1, November 2nd, I talked about EWZ trading. I said it was trading at 38. It's good for an entry, only for very aggressive, but you need to take the trade and look for lower lows under 38, right? That's exactly what happened. Is it not? Of course it is. Soared up to 43.95 over the next several days, then collapsed. And now it's at 35 and change. Okay, so this stuff, it's all been spot on. Spot on. The last thing I wanted to end this this particular presentation with is 4 questions to answer. Now, this is not economics, but I wanted to add this now. It's important. 4 questions to answer when forecasting the stock market, okay? This gives you a better understanding once you answer these 4 questions or ask yourself these 4 questions, a better understanding of how to utilize the forecast, right? So the first question, and I'll probably revise this in the future. I didn't think about it that much, but this is what came to me immediately. Where is the market headed, right? That's the most obvious question. That's the question that everyone waits for every month when they anticipate the release of the market forecasting presentations, right? You want to know where the market's headed. The second question, over what approximate period is the market headed in this direction, right? So we address here, you want to know what the duration, what the period. I could say the market's going to fall by 1,000 points over the next 3 weeks, right? Well, for some of you, that doesn't mean anything, does it? Most of you, it shouldn't mean anything, actually, if you're real investors. Now, if you're short-term traders, okay, that means a lot. And I'm not saying that you shouldn't short-term trade if you're a long-term investor. There are times when you should. But the bottom line is that unless you give a frame of reference, a bigger picture analysis as to what that means over the longer-term period, then it doesn't help us that much now, does it? So we want to know what's going to happen after that 1,000-point decline. Is it going to trade flat for another month or 2 months and then collapse lower? Is it going to rally? Is the trend going to reverse into bearish? Or is it we're going to retain that bullish trend? Is it going to rally and maintain a bullish trend, right? The third question, what is the risk of staying in the market versus selling over this period? So in other words, what is the upside versus the downside potential, right? So not only is it important to provide, and I'm not saying you got to nail the forecast. Once again, the important thing about any forecast is laying out the scenarios, laying out the relative probabilities of what could happen, laying out the relative risks so that you can decide what you should do. Some of you are active, very active. Some of you are not that experienced. You're more passive, right? So I'm telling you what I think is going to happen. I'm giving you different scenarios. I'm giving you a generic, maybe asset allocation, risk management. You decide how to use that for your own purpose, relative to your own risk tolerance, your own activity level, your own skill level, right? Your own investment horizon, your own investment objectives. That's what you have to work on, okay? It takes some time to develop that understanding, but that's really the easy part. The easy part is really knowing yourself, because you can work on yourself 24/7 anytime you want. I can't grab you and slap you around and get you to get with it, can I? All I can do is provide you my best assessment of the scenarios and what I think is going to happen and relative to risk and so forth. But you have to act upon these things based upon not only your own risk tolerance, investment strategy, investment objectives, and so forth, skill level, activity level, but also based upon what happens, because I don't have a crystal ball. Things can change, right? So that's the third question. Once again, what is the risk of staying in the market versus selling over this period, right? So let me give you an example. Let's say that we were hitting a period of questionable uncertainty. In other words, I'm not quite sure about the uncertainty, right? I don't know how much to gauge it. I just know that there's increasing uncertainty. I know that we're towards the end of a bull market, and I think that a bear market is closer to materializing than we have remaining in the bull market. So let's say that you are 65 years old. You're pretty passive. And I talk about a very uncertain period whereby we could see some downside. And I think that the downside over the next few years is going to be much higher than the upside. Well, if you're a passive investor, older investor, your investment horizon is short, that is the time that you have to invest, then you're going to want to be really conservative now, aren't you, right? So for you, you might want to sell on strength, gradually get out of the market, things of that nature, and kind of shore up cash. because you're not 25 years old. You're not 35 years old. You don't have 20, 30, 40 years to invest in the market, right? And you have a passive strategy anyway, you see? So that's just one example. Okay, fourth and final question is, do we expect to see a change in trend over this period? And I kind of alluded to that earlier. That's also very important, right? Do we expect to see a trend change? Does this move that I am forecasting, is this a signal of a change in trend? Or perhaps the change in trend is coming. We see it down the road, right? This is really the most important question to answer. It's probably the most difficult. So always keep your mind on those questions. Don't just act like a robot and I say, well, I think the market's going to go down here. Always keep in mind what that means to you, what that means for you as an investor, right? Every investor has a different profile, a different risk profile, a different activity level. Younger investors can take on more risk than older investors, right? Older investors have to be very conservative. Okay? So I just wanted to point that out.
There are two fundamental reforms that we need is to get adequate capital and two, to get far higher levels of enforcement of fraud statutes. Existing ones, I'm not even talking about new things were being done which were certainly illegal and clearly criminal in certain cases, which, I mean, fraud is a fact. Fraud creates very considerable instability in competitive markets. If you cannot trust your counterparties, it won't work. And indeed, we saw that it didn't.
So things went very well, and then the economy collapses. And so all of a sudden people are saying, well, it was Alan Greenspan's fault because he should have anticipated this. Did you think that was fair?
Nobody forecast the 2008 crisis. One of the things I put in the second book I wrote was how the IMF missed it, the Federal Reserve missed it. You go down a whole series of the major forecasting.
Well, everybody got it wrong, let's say.
You can't have a crisis of that nature that is not a surprise. Nobody forecast the 2008 crisis. One of the things I put in the second book I wrote was how the IMF missed it, the Federal Reserve missed it. You go down a whole series of the major forecasting.
Well, everybody got it wrong, let's say.
You can't have a crisis of that nature that is not a surprise. Nobody forecast the 2008 crisis. Nobody forecast the 2008 crisis. Nobody forecast the 2008 crisis. There are two fundamental reforms that we need is to get adequate capital and two, to get far higher levels of enforcement of fraud statutes. Existing ones, I'm not even talking about new things were being done which were certainly illegal and clearly criminal in certain cases, which, I mean, fraud is a fact. Fraud creates very considerable instability in competitive markets. If you cannot trust your counterparties, it won't work. And indeed, we saw that it didn't. Certainly illegal and clearly criminal in certain cases, which, I mean, fraud is a fact. Fraud creates very considerable instability in competitive markets. If you cannot trust your counterparties, it won't work. And indeed, we saw that it didn't. certainly illegal and clearly criminal in certain cases, which, I mean, fraud is a fact. Fraud creates very considerable instability in competitive markets. If you cannot trust your counterparties, it won't work. And indeed, we saw that it didn't. There are two fundamental reforms that we need is to get adequate capital, and two, to get far higher levels of enforcement of fraud statutes. Existing ones, I'm not even talking about new. Things were being done which were certainly illegal and clearly criminal in certain cases, which, I mean, fraud is a fact. Fraud creates very considerable instability in competitive markets. If you cannot trust your counterparties, it won't work. And indeed, we saw that it didn't. Nobody forecast the 2008 crisis. Things were being done which were certainly illegal and clearly criminal in certain cases, which nobody forecast the 2008 crisis. 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 Nobody forecast the 2008 crisis.
terms of getting back as an investor, if it's coming down to here, almost irrespective of what's going on, I have to believe, if I have to make a call in advance, and of course I can change depending on what happens, but I have to believe this is where you want to start doing that 18, 17, around there. Their earnings report is a complete game changer, at least for quite a while. Bottom line, NVIDIA now is going to enter the realm of Tesla, Apple, and all these other big, I mean, listen, NVIDIA can come down to 150, come down to $100. If you don't think it's possible, then you don't understand how the market works. I mean, listen, NVIDIA can come down to 150, come down to $100. If you don't think it's possible, then you don't understand how the market works.